Ren TV just passed a milestone, our 50th newscast, and we'd like to share that landmark with you. Here are highlights from some of our more memorable, more popular segments. We'd like to thank all those who participated in our program and also thank you for watching. Remember, these and other reports are always available in our on-demand library.
This is Nina Maria Potts reporting from London, and you're watching World Risk and Insurance News. At the site of the Rendezvous de Septembre.
I think what's shocked most people has been the vehemence of the broking fraternity on behalf of their clients.
There cannot be a hard market without blood on the streets. And the question was raised over whether there really was blood on the streets quite yet in the reinsurance market.
There are a lot of commentators talking about rates. A lot of them aren't the ones that are putting capital to risk.
I believe there's a significant amount of opportunity for growth in this market, and it's largely going to be driven by non-U.S. exposure.
Enterprise risk management, which is very important to companies now and is of great interest to companies in Asia and the Pacific Rim as well.
Enterprise risk management is a portfolio way of looking at risk. So we look at hazard, operational, market, reputation, and human capital risks together.
Hello, I'm Natalie Carney from New York.
The most direct impact of the crisis on U.S. property casualty companies has been the long, slow, and steady decline in interest rates.
How has the budget stalemate in Congress affected both the U.S. economy and the insurance industry as a whole?
Well, Congress has worked very, very hard recently to try to destroy the American economy.
For insurance companies, the connection's really clear. Do IR well, and it's easier to hit your return on equity targets.
Yeah, the recent volatility in global stock markets has by no means left the property and casualty sector unscathed. Stocks have been in whiplash for months.
Insurance fraud is not a victimless crime.
Probably the most noteworthy thing in recent history is U.S. healthcare reform.
Some people asked Nancy Pelosi where Congress got power from to require Americans to purchase health insurance. And her response was, "Are you kidding? Are you kidding?" We will have a decision by June of 2012 on whether this provision is constitutional or not, just in time for our 2012 elections.
Solvency II today has been deferred across Europe for a further year because of the economic downturn.
There is a political move to try and bring things within the IMD together with MiFID and other investment directives. And that is wrong. It is fundamentally wrong.
Is the UK economy truly improving?
Growth is flatlining. The last quarter of last year, well under 1%. Even the latest unemployment figures still show 8.5% in this country. That's way too high.
Risk management is an exciting profession. It's ever evolving, and it's more important than ever.
The challenge for risk managers is to come to the table and to help lead and drive the discussion, but also realize that at the end of the day, they can't personally own most of the management of those risks.
Really, the risk practitioner is becoming a member of the C-suite.
Risk managers really needed to pay attention to their supply chain risk and their contingent business interruption.
I'm Brian Scott-Smith reporting from Philadelphia.
Very happy on behalf of Marsh to present Lloyd's and Chairman Nelson here with the original slip from the Carpathia.
The insurance industry's had a rough ride in the course of the last couple of years.
2011, as you know, was a very testing year for the market, the most testing for many, many years.
Diversification seems to be the big lesson that came out of the crisis.
When it comes to buying insurance and looking at risk management generally, most of Asia, or many parts of Asia, are really in its infancy.
If you go around the world, you'll find that every jurisdiction has a slightly different set of rules.
We've seen many evidences of companies, as a result of primarily employees using social media, causing brand and reputational harm to organizations.
The buzz in the marketplace lately has been around hydrofracking and what are the exposures and liabilities there.
Terrorism risk insurance, the TRIA, is really probably the most efficient way of taking care of this problem.
I'm here in Dublin for the European Insurance Forum.
Insurance companies and reinsurance companies have decided that their structure will be to have a hub operation in Ireland.
When I say that the corporation tax rate that is there will remain a strategic part of our development strategy, that will be the case.
And one of the things I'm very concerned about is that many areas of risk are no longer being covered by the insurance industry. I think that puts us at risk in insurance of being irrelevant of not making the difference we're supposed to make.
If I think of risk in the longer term, I suppose I think of the aging of the population, I suppose I think of concentration of risk, and I think of population growth.
That's been our report. I'm Manoush Samarodi from New York. Join us next time for more world risk and insurance news on RIN TV.